Hey everybody, this is Jim at SP500chart.com. It is about 3 o'clock in the afternoon on 8/24/2014. This is our weekly review, and we're going to also look at what happened on Friday, the 22nd. But before we do that, I'll need to remind you that the website and this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy with no voice who draws lines on charts. So let's take a look. First, we're looking at a daily chart. And this is just to show you a couple of major support lines. This blue line we have not come close to since November of 2012. This red one has been working since January of 2013. So we're really into some fairly long, call it a channel, if you will. It's not a perfect channel, but we've got two really pretty long support lines. You see that blue one actually goes back to the very market bottom back in 3/9 of 2009, and it also touches on that October low of 2011. Now let's zoom in just a little bit again. Here's the daily chart. We are right here at flirting with that 1990 level that formed a top about a little bit more than a month ago. If we look at things on a 30-minute chart, we have some features that I think are important to review. Here was our, I guess we call it a triple top. It's somewhat of an irregular pattern, but it had a clear neckline. That neckline broke in broken neckline fashion. Then we formed this descending wedge, which we picked up on fairly quickly, with the idea that once we got out of that wedge, we would at least come back and test this neckline. Well, this past week, we actually were under the neckline for only one day, and that was Monday. Tuesday, Wednesday, Thursday, and Friday were all over this neckline. Let's get rid of that Bollinger Band. There we go. The target from this inverted head and shoulders pattern was met, briefly exceeded. We actually on Thursday traded up almost as high, or right at the 1995 mark. We've also been inside a rising channel for the past 2 weeks, but a good bit of this past week, we sort of accelerated and got out of the top of that channel, at least it appears, for a little bit. And I mentioned that because this was a very constrained pattern, that I would expect this lower line to break pretty soon. And it did on Friday, not by a lot, but by enough to say that just really couldn't last very long. For one thing, it was moving up at a pretty good clip, and for another thing, there just wasn't enough, what's a good way to put this, there wasn't enough range in this little gray channel to really entice buyers. I mean, who wants to say, gee, the market sold off in 1988. If it does, I'm a buyer at 1981. Or it sold off at 1986. I'm looking for 1980. No, I don't think people look that way. high frequency traders might look that way, but I think the majority of actual humans would say, you know, we got up to 19, well, here, let's just look at it this way. Most humans would say, gee, we got up to 1995. If this market comes back down to 1905, I'm a buyer. They're not saying 1995, I'm looking for 1989. Does that make sense? So, that little channel was so narrow, there just wasn't enough payoff. I would rather expect tomorrow, the 25th, that we would start the week with some weakness. It just looks that way to me. It looks like this little channel broke, and we're due to come back down and test some support levels. So don't be surprised if that's what happens. Of course, I've been wrong before. I freely admit it. But the chart has been doing a pretty good job here lately of cluing us in on things. We had this bull flag, let us know we're going to go up. We had this little very small inverted head and shoulders pattern right here. It let us know we're going to go up. This larger inverted head and shoulders pattern, it let us know we're going to go up. Now, I've got a new line on the chart that we just put there this past week. What is it? Well, what it is this top and this top. These are the last two tops that we've had that make technical sense. So I think that we would expect resistance at this line if it is reached. If this is not reached, we may alter this line. But I am sort of looking at that low 1990s level now as an area of important resistance that, if taken out, let me bring this into a little bit better view on a daily chart, that if that 1990s level is taken out, then we may be looking at another pattern similar to what we saw in March, April, and May. That is, a good rally, a little noodling around, a brief taking out of the two previous highs, which would have been here, there's the brief taking out, a significant sell-off, a regaining of about the same levels that were that high, then another little sell-off, then a breakout over that neckline. Maybe we're setting up the same thing right here. It's too early to lock into that, but I don't think it's too early to be on the look for it. So guys, as far as the week win, it was pretty simple, frankly. There's our 5 days. 1, 2, 3, 4, 5. We knew we came into the week after having broken out over the neckline of our inverted head and shoulders pattern. We also knew that we had gotten a pullback on Friday to that neckline. So at that point, you have to say it's a buy, and we're looking for the target for the inverted head and shoulders pattern, which in this case was about 1985, 1986, something like that. We made that. It was a piece of cake. So guys, it was a great week for the validity of this chart. Let's just see if we get that really, really nice potential bullish pattern that, if it plays out, we would be looking for an eventual move out of this pattern that is significant. If we just measure the height of this starting at 1880, we've got about an 85 to 90 point target. So if we break out over 1990 and get over 2000, I think we're looking at a target in the mid to high 2000s. So guys, don't be surprised at some weakness this week. Let's look for, rather, where we find support if we indeed do get that weakness, because that could very well be the tell as to what the next thing is. If our weakness does not exceed some of our support lines that we've got on this chart, then we could very well be looking at another continuation pattern pointing us in the direction of something north of 2050, as hard as that may be to believe. So let's keep our fingers crossed. Stick with me through the week. Thanks for sticking with me through this past week as I was on assignment doing some photography in Tennessee, and hopefully my voice will start to recover. It's kind of off and on. It's gotten better for a while, and then it gets worse. I went to church with my family this morning and made the mistake of trying to sing. Felt great. I could sing, but then afterwards I was like, ugh, why did I do that? So guys, thanks for watching. Take care, and we'll do videos throughout the upcoming week. Maybe we get a little bit clearer picture. Take care.